Now we'll focus on the last module of your not-for-profit CPA materials, and this topic is related to when a not-for-profit entity actually holds contribution for others, or one not-for-profit could work as an intermediary recipient to give the contribution to another recipient. That means any form of contributions, it could be cash or any other assets or non-financial assets, those are being transferred from one not-for-profit entity to other not-for-profit entities. There are three parties involved here. One is the donor, and of course donor means who actually donates money, and the donor is giving the money or any other assets to one not-for-profit entity who we can call as the recipient. And the recipient actually is holding the cash or the assets temporarily, because ultimately they will transfer those cash or donations to other not-for-profit entity, and the ultimate recipient, we can also call them as beneficiaries. You will also see the topic is discussed in chapter 18, and it is also discussed in the CPA materials. So what I did here in this lecture, I combined the textbook context and the CPA materials, because some topics are not in the textbook. On the other hand, here you will see some topics are not discussed in details in the CPA materials. So here you will see few other terms. One is the variance power. So what do you mean by variance power? Variance power means the right to use those resources or assets. So when the donor donates cash or money to the recipient, the donor could retain the variance power. That means in that case, the recipient or the intermediary not-for-profit entities will have no power to utilize the money. That means they are receiving the money but without variance powers. And in that case, they could not show that as a contribution revenue, rather it will be a liability to them, because they are holding it ultimately to give it to the other beneficiary. On the other hand, donor could relinquish the power or the control on that assets. In that case, donor does not have any more rights to utilize or hold the asset or to give the assets back. And now the recipient is receiving the donations with variance power. So we will see these both scenarios, how donor will record the entries and how the recipient will record the entries. Now, you will also see two types of scenarios, and these are related to the recipient and the beneficiaries. So the recipient and the beneficiaries, they could be financially interrelated. Financially interrelated, which means that they have close economic relationships. The recipient could influence the beneficiary, or the recipient could have like regular economic transfers or transactions between the beneficiary and the recipient. For example, Sacred Heart University could establish a foundation, say Sacred Heart Foundation, and that could be the recipient to receive donation, and ultimately that foundation could distribute those donations to Sacred Heart or other not-for-profit entities. In that case, the recipient can influence the beneficiary and they are financially interrelated. Or you will also see a scenario where the recipient and the beneficiaries are not financially interrelated. So that means not financially interrelated. They cannot influence each other, or they don't have like very frequent economic transfer or transactions. For example, the United Ways, which is a great big not-for-profit entities, they collect huge billions of dollars and they distribute the monies to other not-for-profit entities in third world or developing countries. So here you have to look whether the variance power is being held by the donor or the variance power is given to the recipient. That means if the recipient is with variance power or without variance power. You also need to check whether recipient and the beneficiaries are financially interrelated or not. And depending on the situations, we will do the journal entries. Now let's focus on the journal entries for these three parties, and we will discuss all scenarios. Again, I combine the content from the textbook and the CPA materials, and I am focusing on the journal entries because those are the foundation or building blocks of your learning. Let's focus on the donor's accounting. So donor usually would give money to the recipient, but you already know that donor could retain the variance power. So donor could retain variance power. That means although they are giving the assets or contribution or money to the recipient, still they have every right on that resources. They could utilize or use this at any time, or they could just take back the assets or resources and use for other purposes. So in that case, what donor gonna record? Donor will record it as a refundable advance. Refundable advance. So again, this is not the donor's accounting or the journal entries are not in the CPA material, so you will see in the textbook, but I'm showing all three parties together that will give you a complete picture of this accounting. So donor is actually giving an advance, and it could be refundable, right? Because donor still has power on that assets, and they could give cash or they could give any other assets. If it's any other assets, that would be recorded as per the fair value. Now, donor could relinquish the variance power. That means in that case, recipient is receiving with variance power. In these type of scenarios, donor will have no rights once the contribution is given. So if donor relinquishes variance power, that means they're just giving the money as a charitable donation, so they will record it as an expense. It could be charitable expense or charity, so they will just show it as an expense debit or charitable expense or charity, just to identify what type of expenses it is, and they will credit cash or assets. Here the recipient is receiving the donations with variance power. So here you see the journal entries from party 1 or donor's perspective. Now we will see the journal entries from the recipient and the beneficiary's perspective too. Let's focus on the entries from the recipient's perspective. So again, the recipient could receive the money with variance power or without variance power. So we will see two scenarios. One is without variance power and another is with variance power. What will be the journal entries? Now remember here the recipient and the beneficiaries, they could be financially interrelated or not. So we'll also see two other types of scenarios, that means whether they are financially interrelated or not. Let's assume the first scenario is they are not financially interrelated. Of course, we'll see the other scenario when both the recipient and the beneficiary, that means the ultimate who will receive the money, they could be financially interrelated. Now, here remember, without variance power means that the recipient or the intermediary not-for-profit is receiving cash or assets, but they don't have any right to use those money, so they cannot record it as a contribution revenues. Rather, they will record it as a liability. So of course they will debit cash or assets, but on the credit side they will record a liability, and that liability we called it refundable advance, or you could also write refundable advance liabilities. So now if you match it with donor's entry with these recipient's entries, it's just the opposite, because donor is debiting refundable advance. It's just one kind of advance, they are giving it to the recipient. On the other hand, recipient is crediting that refundable advance, they are showing it as a liability. Now how about with variance power? In this scenario, the recipient has every right where to use the money, how to donate it, when to donate it. So in that case, they have every right to record it as a contribution revenues. You have to debit cash or assets and credit contribution revenues. And remember, here they are recording it as a revenue, but the donor ultimately has the condition or restrictions that it will be given to the ultimate beneficiaries, so they will classify it as with donor restrictions. With donor restrictions. So now here, when these two parties are not financially interrelated, you will record these journal entries. Remember, if the recipient does not have any power on that cash or assets, they will record it as a liabilities. If they have the power, they will record it as a contribution revenues. Now, what if they are financially interrelated? That means, I gave you the example, Sacred Heart Foundation and Sacred Heart Universities. Foundation is the recipient and university is the ultimate beneficiary who will receive and use the money. So they have financial interrelations, and the foundation can influence the university, or the university could also influence the foundation. So they have some close financial interrelationships, and in that case, no matter the recipient has variance power or not, both cases the recipient will record it as a contribution revenues. So they will debit cash or assets and credit contribution revenues, of course, with donor restrictions. Please note, the CPA book, they did not classify with or without donor restrictions, but whenever you will record any revenues or contributions, you have to classify it whether it is impacting your net assets with donor restriction or without donor restrictions. Because here, no matter it's with or without variance power, ultimately the donor told them that it will be given to the beneficiaries. Now, as I mentioned, for financially interrelated both cases, with or without variance power, the recipient will record a revenues. They don't need to record liabilities. So with variance power or without variance power, both cases, it will be cash or assets debit, and it will be the contribution revenues credit, and you can label it with donor restrictions. So now we see the second party or the intermediary or the recipient's journal entries. Both cases, whether they are receiving the variance power or not, and then whether they have any financial interrelationship with the beneficiaries. Now, the last part of these accounting, when you transfer assets from one not-for-profit to another, the last party is the beneficiary, and we will show how we gonna record their journal entries. Again, you will see those situations, whether they are financially interrelated or not. So I'm showing you different scenarios, not financially interrelated, or they could also be financially interrelated. And you also see the scenarios whether the recipient is getting the variance power or they're not getting the variance power. That means it could be without variance power, or it could be with variance power. So if the two parties, the recipient and the beneficiaries, are not financially interrelated and the recipient is receiving without variance power, then the beneficiary, that means the ultimate recipient, will record it as a contribution receivables, because the donor is actually giving this party, the beneficiary, and donor still has the variance powers because donor wants to give this beneficiary and this recipient is working as an intermediary. So this beneficiary is expecting to receive this contribution revenues. Since the recipient has no power on it, they will record it as their contribution revenues and they're expecting to receive it, so they're gonna debit contribution receivables and they will credit contribution revenues. And we assume that the donor did not give any restrictions to the beneficiary, so that will be contribution revenue without donor restrictions. Donor restrictions. So now, how about they are financially interrelated? When these recipient and the beneficiaries, they are financially interrelated, then the beneficiary will do an exceptional journal entry. They could not show it either as a already received contribution revenues, or they already cannot record, of course, the cash or assets as debit. Rather, they will show a different journal entry. Again, this is not in your textbook, you see in the CPA materials. They will show or debit as interest in recipient's net assets, interest in recipient's net assets, debit, and they will credit changes in interest in recipient's net assets. Changes in interest in recipient's net assets. Remember, they are financially interrelated, right? So they will have several economic transactions. So the recipient is holding some contributions for them. So that's why they are showing that they have interest in recipient's net assets, and what the interest they have in recipient's net assets is actually increasing, so they credited it, the change they are showing it. Now here, if the recipient actually receives the money with variance power, and the beneficiary may feel some uncertainty, right? The beneficiary is not confirmed or guaranteed that they will ultimately receive the money from the recipient, because here recipient is receiving the variance power, and the recipient will actually decide whether or to whom the money will be given, and they are not financially interrelated. I gave you the example at the beginning. The United Ways could receive huge amount of donations from a donor, and they could give it to another not-for-profit entities. It could be in any like developing countries not-for-profit entities. They are not financially interrelated, and the recipient or the United West could decide when to give, what to give, or whether to give. So the beneficiary, ultimately it's not certain, so lots of uncertainty, so there will be no entry. Right. So the beneficiary will not record any entry when they are not financially interrelated and the recipient is receiving all the power or control on that donations. Now here, one more item I would like to add here. When the recipient and the beneficiaries are financially interrelated, and the money is received by the recipient without variance power, and you will see that it's a little bit different type. It could be any non-financial contributions, or it could be cash from a pool. Then the beneficiary actually will use a different debit account. They will debit beneficial interest and they will credit contribution revenues without donor restrictions. So again here they are not financially interrelated. So you see different scenarios. You see different scenarios when the variance power is given to the recipient or it's not, whether recipient and the beneficiaries are financially interrelated or not. And depending on these 4 types of scenarios, you know what to record from donor perspective, what to record on the recipient or intermediary not-for-profits book, and what to record on the book of the ultimate beneficiary or the ultimate recipient of that donations.